Good day. It's a lovely day today. We are privileged to be alive. We are privileged to use our minds. So let's do that. Sparrow, we can ignore that in this question. The accounting period of Sparrow traders ends annually on the last day of February. The accountant of Sparrow traders fell ill, and although 3/4 of the financial statements were completed, some transactions must still be corrected or recorded. Sparrow traders add a markup of 33.3% on the cost price in order to calculate the selling price. So we know if we're going to write that down, it looks like this. 100 plus 33.3333 equals 133.3333. The entity is not registered for VAT. You have been in service of the entity for the last 3 years, and because the accountant was your mentor, management thought it's best that you finalize the financial statements for the year ended 28 February 2015. And they give you also the trial balance as at that date, 28 February 2015. Pre-adjustment. We have capital, drawings, land and buildings, equipment, accumulated depreciation, inventory bank, creditors for wages, creditors for UIF, charge for pay as you earn, debtors control, allowance for credit losses, fixed deposit, loan, creditors control, purchases, sales returns, stationery repairs, rent income, salary wages, and credit losses. There we've noted inventory as at the beginning of the year, and here we've noted we have purchases. So because we have purchases, it's a periodic inventory system. The first point here, no entry has been made for a credit invoice received from Centra stores. The inventory was received and placed in inventory holding on 28 February 2015, so in the current financial year. The invoice price before trade discount of 15% was granted, amounted to 5,500 Rand. Before. Good. An agreement between Centra Stores and Sparrow Traders stipulates that a settlement discount of 4% will be charged should this entity settle the account within 30 days from the invoice date. Sparrow Traders adopted a policy whereby settlement discount is provided for on the date of a credit purchase and an allowance account is created. So clearly, it is their expectation that they were going to make use of the settlement discount. Clearly, it's the expectation and the policy that I have to create an allowance account. So the first thing that I have to find out is what is the total of the invoice. And the total of the invoice will be after we have deducted the 85% trade discount. And then the value that we're going to debit our purchases for will be the amount after we have deducted our settlement discount allowance amount, because we're only going to post the amount net of the settlement discount allowance to our purchase account. So that then gives us a total of 4383. Now we'll see that in this question, the memo still have cents in. So it's a very old question. That's why they work with cents. Please, in heaven's name, don't work with cents. The only time that you will work with cents is if you're going to work out things like unit prices. Then you will have to work with cents. Otherwise, your answer is not going to be right. But when we're going to prepare a statement, I have never in my life seen a financial statement with cents in. And if there is any cents shown in the statement, then it's clearly somebody who doesn't know what they're doing. So in a financial statement, never cents, please. Good. So what are we going to do? Well, what do we require from us? They want from us prepare the statement of profit or loss and other comprehensive income. So I'm not worried about creditors and all that kind of nice things, but I am worried because about my accounts that has an impact on my statement of financial position. So that's an invoice, so my purchases must increase with a 4383. Now, before we go any further, we have sales returns here. Let's please get rid of the sales returns. So the sales returns, we're going to close off against our sales. Will be a debit against sales, so therefore it's going to reduce our sales value with 5,400 Rand. There's no purchases returns, so we can leave that one as is. Good, the second one. On 27 February, a statement was received from Roosters, a creditor of Sparrow. The statement agreed with all recordings in the general ledger and the creditor's ledger of Sparrow, except for interest charged by Roosters amounting to 69 Rand. And then they go here on a long explanation why they didn't qualify for a settlement discount and why everything was actually received late and why they have, in fact, charged the interest of 69 Rand. I have no interest here. So I will have here interest of 69 Rand. Obviously, if I had to do the statement of financial position, I would have rectified my creditors account simultaneously. Good, and that is interest paid. Right. Inventory determined through physical stock count on 28 February 2015. Inventory 55,800, that's our closing inventory, but you will see that there's got some impact on the closing inventory. And then stationery 980 Rand. So we're going to reduce our stationery with the amount still on hand at the end of the year, and we would have debited the consumable stock with 980 Rand. Now, merchandise was sold to Eve Philippus for 2,000 Rand on 26 February. The necessary documents were completed and the relevant entries were made. Philippus requested that merchandise be kept at the premises of Sparrow until such a date that he can come and collect the goods. He had to evacuate his own premises and didn't have space for it. And then Philippus bears full risks of the merchandise, so the sales transaction was concluded. He was the rightful owner of that merchandise. The fact that this merchandise had already been sold was not taken into consideration during the stock count. So obviously we will have to adjust that 55,800. This is one of the very few examples that you have where we're going to adjust our closing inventory with the physical stock that was taken with any amount. Good. Merchandise was sold for 2,000 Rand. Now, we know that we show our inventory at cost. So therefore, we must convert the sales price into a cost price. They gave us our markup percentage right in the beginning. So the cost price would be then 100 divided by 133.333. And that would have given us a cost price of 1,500. So our actual closing inventory was not 55,800, it was 55,800 less 1,500 Rand. Good. Merchandise with a sales value of 2,666 was donated to a charity. Again, they give us the sales value of the donation. So we have to convert that into a cost price again, 0.333, and that equals 2,000 Rand. So what do we have to do here? It's nothing to do with our closing stock, but it's got to do with our purchases that we're going to adjust with that amount. Purchases here going to reduce with 2,000 Rand, and then we have donated that stock to somebody, so we're going to have an expense account here, donations, 2,000 Rand, and that's an expense. Good. Next one. A stock column, a debtor whose account had been written off in September 2014, previous financial year, on an amount of 450 Rand on 25 February 2015. The transaction was recorded through debit in the bank of 450, which is correct, and debtor's control was credited. What should they have credited? They should have credited credit losses recovered. So if I'm going to rectify that, I'm going to debit, it was a credit again, debtor's control, so to take it out, I'm going to debit debtor's control with the amount received, 450 Rand, and I'm going to credit here Just make a space here. Credit losses recovered. Which is an income item of 450 Rand. Income item. Good. Included in the balance for allowance for credit losses was an amount of 525 Rand. Now, on our trial balance, we have allowance for credit losses here of 810 Rand. So included in that 810 Rand was 525 Rand, which we actually created specifically for a debtor who posed a high risk for non-collection. The debtor, however, paid his account on the 27th of February 2015, right before year end. This was recorded through debit in the bank account, which is right, we've received the money, and then they credited the allowance for credit losses account. Now, if they've done that, the debtor is still being shown as outstanding. So what we have to do is we should have credited the debtor's account with the 800 or the 525 Rand. So what we're going to do now is we will debit the allowance for credit losses. So that's going to reduce the balance. The allowance for credit losses has got a credit balance. So we're going to debit that account and we're going to credit our debtors control account with 525 Rand. During a routine inspection conducted by the management early in February, it was found that the debtor was issued with a credit note. The selling price of the item was 700 Rand. The item was placed in inventory holding on the same date at the correct cost price. The credit note was recorded through a debit in debtors control account and a credit in the sales account. So it was a return that took place. It was a credit note issued. The debtor returned stock. So what should they have done? They should have debited sales returns or sales, and they should have credited debtors control account. So if I'm only going to take it out once, I'm just going to cancel the original entry. So what I will have to do is I have to take it out twice, 1,400 Rand. So we're going to credit debtors control with 1,400 Rand. And we're going to debit sales, 1,000, debit sales. So we have to deduct it with 1,400 Rand. Based on past experience, management decided that an allowance of 5% will be a reliable estimate for the possible credit losses during the 2016 year. So the first thing that we have to do is to update our debtors control balance to the final balance. And then if we're going to do the calculation, let's do it here. Yeah. If we're going to update that with all the information, it would have had a balance of 17,075. 5% of that equals 854 Rand. The balance on our allowance for credit losses account is not 810 Rand anymore. We have reduced it with that 525 Rand adjustment entry. So the balance at this point of time is only 285 Rand. So the adjustment entry that we need in the allowance account is an increase in the allowance account of 569 Rand. Allowance for credit losses has got a credit balance. So if we want to increase it, then you're going to credit that allowance for credit losses with 569. And the counter leg is going to be credit losses or credit losses adjustment, which is going to be an expense account with that 569 Rand. So that one is going to be increased with 569, and your allowance for credit losses would have been increased with 569. An invoice received from Burden Builders was debited against equipment. The invoice contained the following details. Repairs to the existing building, 3,500. Repairs to the owner's private residence, 1,500. Now repairs, I cannot capitalize. It is a normal expense. So what I'm going to do is I'm going to take out that full 5,000 Rand, 3,5 and the 1,5 out of my equipment account. Equipment was mistakenly taken to this account. We're going to take out the 5,000. We're going to take the repairs part, 3,500 Rand, to an expense account. Repairs plus 3,500 and the 1,500 Rand that was actually paid personal expenses of the owner. We're going to take that to drawings. So drawings there plus 1,500. Good. Then a suite of offices was let to Golden Flowers as from 1 January 2014, previous financial year. Sparrow Traders increased the monthly rental as from 1 January 2015 by 10%. Golden Flowers paid the monthly rental for March and April during February, so clearly they've paid for 2 months in advance. The entire amount received was recorded as rent income. So if you look at rent income there, 25,920. And that was equal from 1 March up to 31 December, which gives us 10 months at a normal rent. Then there was 2 months at an increased rent, but we also prepaid 2 months. So in total, it was 4 months at an increased rate of 10%, so multiplied by 1.10. Now grade 3 account maths, once you resolve this whole equation, you will then get x equals an amount of 1,800. What was actually the amount that we have received in advance? We have received 2 months rent in advance. So we didn't receive 1,800 Rand, we received the escalated amount, 1,800 times 1.10 for a period of 2 months. And that gave us a total amount that we've received in advance of 3,960. So if we're going to pass this, we would have debited our rent income. So if we're going to debit that, you're going to decrease that amount with 3,960. And you would have debited prepaid expenses, which is statement of financial position, trade and other receivables, and that was not required from me to do. Good. Then the last one, depreciation must still be calculated on equipment by applying the diminishing balance method at 10% per annum. New equipment with a cost price of 10,000 Rand was purchased on 1 September 2014 and was correctly recorded. So that means included in my equipment balance is my new equipment that I have acquired. Now, under my cost price for equipment, I had 30,000, but I've already passed an adjustment entry of 5,000, which was that invoice which was incorrectly posted to the equipment account. So what we're going to do is we're going to say, okay, well, what is my actual value? It's 30,000 less 5,000 equals 25,000. That's the cost price of equipment. Then we're going to say, well, wait, included there was new equipment of 10,000 Rand. So that means that old equipment was equal to 15,000 Rand. Our accumulated depreciation, as in our trial balance, hasn't been adjusted with the current year's depreciation at all. So this must be our opening balance, 14,300. So our old equipment's cost price was 15,000. The accumulated depreciation was 14,300. So the carry value of the old equipment at the beginning of the year was 70 Rand. 70 Rand multiplied by 10% will give me my depreciation on the old equipment, and that equals 70 Rand. My new equipment Yeah, we've bought new equipment for 10,000 Rand. So the new equipment of 10,000 Rand must still be depreciated as well. 10% per annum on the reducing balance method. We've purchased it on the 1st of September, so we've used it for 6 months in the current year. That gives us a total amount of depreciation of 500 Rand. So total depreciation then 570 Rand. We would have debited an expense account, depreciation on equipment, and we would have credited our accumulated depreciation on equipment with a 570 Rand. Good, and that is in the question. Let's quickly just wrap up and look at the answer. Statement of profit or loss for the year ended of Sparrow Traders, which is a separate line item, 2015 Rand, and please again ignore the cents here. Revenue was a 355,400. There we are, where is it? 355,400 less 5,400 less 1,400. There's the 1,400, the two of them together. Cost of sales, opening inventory as per our trial balance. Purchases was the amount that they gave us, 150,980. We had a couple of adjustments, the 4383 and the 2,000 Rand. 4383, 2,000. Oh, yeah, I've missed something. Let's just quickly look at that thing that I actually scrolled over so very quickly. With Sparrow Traders agreed with and a payment recorded on the statement of 5295. Sparrow Traders recorded the payment inclusive of settlement discount of 6085. So that means that that settlement discount had to be reinstated as part of our purchases amount because it was disallowed. So that is where that amount of 160 comes in. I have debited purchases with that amount and I've reinstated my creditors. I've credited the creditors account with 160 Rand. Here's the donation that we've made. We have added that to the bottom of the page there, the donation of 2,000 Rand. And then our closing inventory, we have adjusted our closing inventory in our notes with 1,500 Rand, the merchandise which we have sold already, which was equal to 1,500 Rand. Good. So opening inventory plus purchases less closing inventory will then give us cost of sales of 164,723, and that will give us then gross profit for the year at a total of 183,876.55. Other income, rental income, 21,960. If you can remember correctly, that was the adjustment that we've paid, 25 less 3,960. Credit losses recovered, that was the one that we've added at the bottom of the page. Credit losses recovered, 450 Rand. There's just the calculation for the rent. Then the repairs, the expense account, after we've done the adjustment to repairs, the 3,500 Rand. Salaries and wages, we didn't do anything with. Stationery, we took out the closing inventory. And then donations is the one that we've added, 2,000 Rand. There it was, 2,000 Rand for the donations. Good, depreciation, we've spoke about that. That was the 570 Rand. And then the credit losses, we spoke about the 569 and the 1,350 was the credit losses amount that was lying there originally. So they've just posted the adjustment with the credit losses account, which is not wrong, but if you've showed it separately, that is not wrong either. Then net profit before finance charges, that was gross profit less plus operating income less operating expenses. And then the finance charges was the interest that creditors has charged us with of 69 Rand, which give us our net profit for the year. Now, I've made a big note here that I must talk to you about consignment stock once more. Remember, I have spoken somewhere in the question about consignment stock. Consignment stock does not belong to the entity. Because it does not belong to the entity, it's not been counted into our closing inventory. What is an example of such consignment stock? It is, let's say that I cook very nice jams. I go to my local Spar. I asked the owner of the Sparrow, can I please sell my product in your store? He says, well, I've got all gold, Koo, Rhodes, a lot of jams on my shelves. I'm really not interested, but I'll tell you why. You can put your jams here on my shelf. And then if it sells, then I will give you the money. In return, I'm going to charge you, let's say, X amount per month for the privilege that you have to display your goods on my shelves. So when the spot owner at the end of the day is going to take stock, he mustn't count in my jams as part of his stock because it doesn't belong to him. Supposedly something happened to my jams. I did put in too much sugar in the jam, and it then have a lot of hard sugar crystals in the jam, and nobody wants to buy it. It is my loss. It's not the spot owner's loss. So I will have to remove that jars from the shelves, and I will have to cover the losses. So consignment stock is never ever part of the entity's closing inventory. Just remember that.